Inside the mind of Brandon T. Adams.
Welcome back to Inside the Mind of Brandon T. Adams. I'm Brandon T. Adams, and let's talk about raising capital, the secrets behind raising capital. In a quick episode here, I'm just going to give a gist of what you need to do and really go through the beginner steps of raising capital. For one, it's not easy. Raising capital is not easy. When you're raising money from people, whether you're raising debt, you're raising equity, you're raising some kind of money for growth of a business and endeavor, it's going to take a lot of work. So maybe you get lucky, but it is, in most cases, from my experience, raising probably well over $100 million now, millions here and there for various companies and projects, crowdfunding, equity raises, PPM, you name it. It is a grind. It's talking to a lot of different people, but focusing, by the way, if you're raising capital, on people that actually invest in the type of deal that you're doing. If you're raising money for a franchise in the restaurant business, you're likely not going to go to some investor who just invests in tech things. You're going to go to an investor who already is investing in the food business or a franchise business. Find investors who invest in the deals you do. For real estate, you want to go to other real estate investors. So go and talk to investors who like the kind of deals that you're bringing to the table. But what is the upside? What's in it for them? The biggest mistake people make when raising capital, it's all about, it's for me. I got this money and this is what we're going to do, etc. But what's in it for the person giving you the money? Why are they giving the money? What's the upside? What do they get in return? What's the irresistible offer? Are they getting equity? Are they getting an accelerated payback from percentage of sales? Are they getting a royalty? What's the time frame? Are they getting paid interest? You got to speak into their needs. And how do you find the win-win where they get what they want and you get what you want? But one thing most people don't talk about is be careful who you take money from. Just because somebody's willing to invest in your company doesn't mean you take it. It could be a debt deal you don't want to do. It could be an equity deal that could hurt you down the road or dilute you too much. When dilution, is it a dilution where maybe out of the gates are taking 10, 20% of your company? You should be thinking about, are you going to have to raise more money later? And if so, think down the road, because I've seen founders dilute themselves so much by the time they get to their exit, they have a very small percent of their company. In some cases, all the investors turned out better than them because they didn't have the right people to give them the right guidance, or they diluted themselves first. So bootstrap as much as you can. Go as far as you can without having to raise outside capital. By the way, debt sometimes can be better than equity because debt, that means you're not diluting. Now, equity, in most cases it's equity, and let's say if things go wrong, you're not paying it back, depends on the terms. But if it goes right, the equity owner will get a big payday. So do you want to go debt? Do you want to go equity? And getting the right strategic investors and partners a part of your company. Now, how do you raise the money? I talked about at the beginning, talking to the right people. You need to make sure you're talking to the right people, but talking to a lot of people. When you have a conversation with somebody about an investment opportunity, you may have 5 or 6 or 7 conversations and also meet in person before they actually send the wire, sign the subscription agreement, or write you the check. It's not just going to happen overnight. These people are smart, most cases very smart investors who are giving you their hard-earned money. So if they're going to give you a $50,000, $100,000, $500,000, or even $1 million check, they're going to make sure they do their due diligence, and you're going to have to really build that confidence and trust with them. And you're going to have a team around you, a dream team, an advisory board, and a plan that shows an investor the pathway to them getting their money back, but also a huge upside. So how is it a win-win all around? Some ways to raise capital is there's crowdfunding. You can do equity crowdfunding. There's WeFunder. There's Republic. There's all kinds of equity crowdfunding platforms where you can raise money from accredited and unaccredited investors. There is raising debt. You could get people that a bank, most cases banks don't give you money, but you get debt from maybe a high net worth individual, or they invest money, or they give money on a term where you pay back over time with interest. And that could be another way. But again, talking to a lot of people, you could do dinners, investment lunches, dinners where people come in, you talk about an opportunity. You save that opportunity for them to invest and get involved, and that could be another way to raise money. There are broker dealers out there that actually go out and raise money for a living. There's investment bankers, people that go out and raise money for you. But the key to this, what I've learned, is having a great pitch, having a great story, consistent follow-up, having a great advisory board, and showing an irresistible opportunity to invest in a company and talk about the big upside. And then also cash flow helps, having IP, having a great opportunity for somebody to get involved with. Those are my tips today in this short amount of time about raising capital. Raising capital can be powerful for you to scale your business, but make sure you raise it right from the right people at the right valuation, and you have a plan with the capital. Because if you don't have a plan with the capital, you're sitting there with money that you don't know how to deploy for growth of a business. So make sure you raise it right. Hope you enjoyed this episode. Feel free to tag me on social media. Share this with somebody who needs to raise capital. I'm at Brandon T. Adams. Until next time, y'all, we'll talk to you later.